So if you guys have been watching the news in the past few days, you might have seen a few times coming up. Maybe you're scrolling through your Google News feed or just seeing it on CBS or whatever other news station locally here. Goldman Sachs recently came out with an article. Well, it wasn't even an article. It was a report to their shareholders saying that San Diego is one of the markets that's going to have a 25% drop. So is that true? Are we going to see a 25% drop in home prices here in San Diego? Well, there's a little bit beyond just that initial level of the story. So if you dig into the articles a little more, you'll learn a little bit more. So that's what we're going to do. I'm going to show you exactly where we are in the San Diego housing market, what the article is actually saying, and then what we're actually seeing boots on the ground with our sellers in this current market, let you know what's actually happened here in the beginning parts of January. So let's get into it. So here's a few of the articles you might have come across. Goldman Sachs forecast 2008 sized crash in the San Diego housing market, or maybe this one right down here. These four cities will suffer a 2008 style crash, according to Goldman Sachs. One of them being, scrolling down, San Jose, Austin, Phoenix, Arizona, and San Diego, California will likely see a boom to bust declines of more than 25%. But this next one, the very first line that you get into, credit researchers at Goldman Sachs now expect home prices in several overheated metros to fall 25% from peak levels. And from peak levels, that is going to be one of the most important lines in there, because in San Diego, we already have had declines from the peak to where we are now. Bringing up this chart is the median sales price right here in San Diego, going back to 2019, where the medians, this is for detached homes, single family residents in San Diego. Back in 2019, you had 610,000 walking on up. You can see where it kind of took off right here, where it did get crazy. So if anybody hopped into the market or knew what was going on in the market in these times, and you're talking to friends and seeing what was going on, or potentially looking to buy, these were the times when it was frothy. It was going crazy. You were getting multiple offers. And in turn, there was a ton of demand causing these prices to go up. We had a little bit of flat at the end of 2021, and then boom, off to the races again in 2022, peaking out in April of 2022. This for median prices. Since then, you can see we have had monthly declines. There's only been one little blip right here where it went up by $8,000. And it continues to go down. Sin right at the end of December, 865,500. So you can see there has been a drop off already. Where would it put us if there is a complete 25% drop off? Well, let's check out this next chart here. All right, so here is that chart that I just showed you in a little bit different form. We just have it in a spreadsheet here. You can see starting in January, it was 880,000. for a detached single family home right here in San Diego, then peaked out in April. You know what happened right around this time in April, May, June? This is when the interest rates started rising like crazy, which we'll get into in a little bit. Some things that if we did continue to see lower median prices, what might be one of the factors, and interest rates is going to make a big play into that. So you can see the declines continuing to go down a little bit, bump in September, dropping all the way to 860 all the way. I mean, that's still pretty high compared to the rest of the nation, but 865,500. So already off the peak, we are sitting at 13.5% off the peak. So how are we going to get to that 25% that Goldman Sachs says? This is how much we still have to fall, according to Goldman Sachs, 11.55%. So if it did that, where would that put us as far as median home prices? It'd put us right at $765,000, which would be right around the February of 2021 levels. So just to give you a little bit of perspective, let me zoom out here just a tad so you can see the whole chart. So this is if Goldman Sachs predictions did come true, and we do see a peak to trough of 25%. But as you're reading those articles, don't get fooled and don't think, oh, we're going to see a 25% from here. In 2022, we saw actually kind of two markets. At the beginning of 2022, it was that frothy market. Towards the end, as interest rates did rise, it did cool off quite a bit. That's when we saw that downturn in median prices for the first time in a long time. Going into 2023, just the first few weeks of the year, it seems like it is picking up a little bit already. not necessarily as frothy as it was, but I'll give you some anecdotes of what we're seeing out there. How is it going to continue to fall to that 25%, if not more? Well, number one is going to be these interest rates. Let me bring up the interest rate chart just to show you. So if the interest rates did creep back up, so here's in that center section where we did see the median prices start to fall kind of mid last year. They went all the way up to over 7%. This is when the market really ground to a halt, because a lot of people who are even looking in the earlier parts of this month when it was under sixes, mid sixes, it shot up so quickly and the fluctuations were so much. Some people were looking at the beginning of the week and ready to write offers at the end of the week, but the changes had happened so quickly that they were priced out or just weren't comfortable with their payments anymore. Since then, we have seen quite a nice little drop off, going down to right now 6.18%. Where'd it go there? There's a few in there, but I like the Mortgage News Daily because they update the most. 6.21%. If this continues to fall, we're going to have more buyers willing and able and ready to get off the fences and come out there. And it could cause an uptick in prices pretty quickly if it does fall significantly into like the mid fives or so. If it does go back up towards the high sixes and sevens, we can see more price declines like we have seen recently. The second factor that can definitely affect this too is the inventory or the number of houses. So you as a home seller thinking about selling your house, how many other people are thinking about selling their house as well? And do they all put their house at the market at the same time? Are there enough buyers out there to purchase all those homes out there, or are we going to see a buildup of homes over the course of 2023? Right now, we're not seeing that in January. It's still relatively low, more than January of 2022 homes throughout the county, but still historically fairly low. And usually throughout the year, we will see it kind of ramp up the number of homes, people selling their homes going into that spring market. So maybe March, April, getting ready. So get your house sold, get into your new house before summer so the kids are ready for the next school year. It's just kind of that spring selling market is when we usually see the most number of homes. So if we see a flux of homes and there's still kind of limited buyers, then we can see those home prices fall a little bit more as well, because it just comes down to simply how many buyers are out there and how many sellers. If there are a ton of buyers like there were last year and not a lot of sellers, well, that's going to drive the prices crazy high. So it could go either way. We are in a holding pattern. We're going to see what happens over these next few months to get a better picture of what's going on. And the third thing that can affect this is if people do start losing their jobs and then they can't potentially make their mortgage payments. This is kind of like a long-term thing. It wouldn't happen all at once, but it could potentially add some more inventory, potential foreclosures, all that kind of stuff. That's not really anywhere in the data as of now, but it is a factor and could cause those prices to fluctuate as well. So what are we actually seeing in the market right now with our sellers and our buyers and what's really going on right there? I've been surprised. In the beginning part of this year, we had an open house first weekend of the year, and it was actually decently busy, not as busy as the open houses were previous year, but the number of offers in that first weekend was not what it was in previous years. So the beginning part of 2022, you would have that open house that first weekend, and most homes that first weekend would usually get multiple offers. Not all of them, but a good percentage of homes were getting multiple offers, which did help drive that price up. This year seems like a lot of buyer interest out there, but the number of offers has not been as crazy. We are getting offers in and around list if they're priced well, but we haven't seen that froth of crazy buyers come in. And it's going to be different for different price points. We did have clients write an offer on a place in downtown San Diego, sub $500,000. And there were actually 6 offers on the property. So it's really price dependent, location dependent, condition dependent. So there's a bunch of factors that go into to see if there is going to be those multiple offers. And we get back to those price bidding wars that we did see last year. We are also seeing buyers come in asking for sellers concessions, meaning they will offer, let's say it's $1 million house, they'll offer $1 million, but then potentially ask for $25,000 credit to help them buy down their interest rate so that the house is more affordable, buying down their interest rate. So it is super important as you're seeing headlines, as you are kind of hearing from friends what's going on in the real estate market, to actually dig in a little deeper and not just read those headlines and say, oh yeah, I'm going to wait for the market to crash, say you're going to buy. I'm going to wait for the market to crash, another 25% to get in. Or as a seller, you're hearing that there's nobody out there to buy a property. There is buyers out there, there are sellers out there. The market is still moving along, and it's going to continue moving along. And it really is dependent on what's happening right now. So As always, if you guys need some information, be sure to hit us up. All the information is down below in the description. We got your back when making the move right here in North County, San Diego.